Well, it's just another bad inflation report that we got this morning. Hello, this is Markets with Megan. It is Tuesday, May the 14th, and coming to you to give you some information about the producer price index that we got for the month of April. We talked about this yesterday, that we'd get a lot of inflation data this week. We kicked it off this morning with producer price index. We'll get the consumer price index tomorrow. The producer price index is the cost that the producers have to incur. It's not surprising that these numbers came in higher than expected because we've seen some other pricing pressures in things like ISM manufacturing costs and service costs. And this is now translating into the producer side of things. Let's just dig into the data that we got. So there was on the headline, there's a lot of different ways that producer prices are reported. They exclude food and energy, then they also exclude food, energy, and trade. All of these came in slightly higher than expected on a month-over-month basis. There were some downward revisions at the headline level, and then excluding food and energy from the prior month. I'm not focused about that. What I think the Fed needs to be focused about is if you look at the PPI, which excludes food, energy, and trade on a year-over-year basis, that jumped from 2.8% up to 3.1%. It's the highest we've seen in a year, and it is clear to us, and I really hope it gets clear to the Federal Reserve, that inflation's going the wrong way. They have to stop the dovish rhetoric. We'll get some Powell speak today. I'm not sure if he'll address this or if he'll simply glide this over, saying that it's going in the right direction. But last time I checked, we're moving higher. So again, this is a problem. The Fed needs to address it. Underlying within this report, when you look at it, it was services. And services is what the Fed has said is a sticky inflation indicator. Now, we'll be back tomorrow with what we think gets a little bit more market reaction with the consumer price index, but it's also going to come alongside with the retail sales data. So what are we seeing from the consumer? We've seen a big weakness in consumer sentiment. Is that finally spilling over into sales? We've had some mixed reports from different retail earnings. So are we going to see that filtered into this monthly data? Keep in mind, this monthly data is also not inflation adjusted. And we know that the price of gasoline has been a big portion of the increase. So we may see the headline number jump up. We'll focus more on excluding out all of those volatile items like food, energy, building materials. And we'll be back to focus on that tomorrow. So we'll be back tomorrow. Lots of information this week. If you have any questions or comments, please feel free to reach out to podcast@verdence.com. Thank you.